started. So on your screen right now, you should see a page that says mortgage and flood insurance update. If you don't see that, please chat me and let me know about that part of it. We'll kind of get rolling from there. So with that, let's see if we can get this PowerPoint going. So this is the slide about Synovus Mortgage, basically just talking about a couple of their different portfolio programs and how they do their high net worth private wealth programs and everything along those lines. One thing that Laura wanted me to mention in terms of going through this is that Synovus is not affected right now in terms of the jumbo market. So they are still continuing to do jumbo loans, and they're doing it at up to $1 million with as little as 5% down. And then they're going above $1 million with more down. And part of their jumbo program is that they don't require PMI to be able to do the 5% down on there. They also have the physician's loan product that works very well as their construction to perm process, and that you can do a single close for that process. And then their affordable mortgage program, which is actually down as little as $500 just to cover closing costs to be able to make a purchase on that. So we kind of flew through that section, as I'm not an expert on the Synovus mortgage side of things, but any questions that are related to Synovus mortgage, definitely please reach out to Laura Dorsey on those. So with that, we're going to go ahead and get started talking about flood insurance. So flood insurance is kind of that Achilles heel to a lot of us in terms of, buyers having fears of flood insurance rates and things like that. And so what we want to do is just kind of add what's going on in the flood insurance market right now, and specifically how it affects kind of like Central to South Sarasota County, as FEMA is in the process of revising the flood maps right now. And it makes an incredible difference to what people are going to be paying from a rate standpoint. Now, when we say that, typically the doom and gloom part starts and people think, oh my gosh, rates are going up. I'll tell you that across every county that has been studied so far, that we're seeing from like actual live rate examples, Sarasota County did the best in the entire state of Florida that we can see in terms of flood rates are actually going to be coming down drastically for most of the Sarasota County coastal properties. So that's a really, really good thing. And it's very positive going into this presentation to be able to talk about. So with that being said, my name is Jake Holhouse. I own an insurance agency called HH Insurance. So I've got my bachelor's and master's degree in risk management insurance from Florida State, as well as the CPCU designation, which is the highest designation within the insurance industry. Our office is really experts in flood insurance. We've worked with the Florida legislature. We've worked with multiple congressional offices on crafting insurance legislation around flood insurance issues and how that works, as well as we pioneered the first private flood policy in Florida back in 2012 when you had flood insurance rates going through the roof. And so we are really the Florida experts on flood insurance. So what we're going to study today are map updates. And so basically how the flood insurance maps are being updated and how that affects flood insurance rates across the board for your buyers. And so with that being said, these are preliminary map updates, and so they're not official at this point, but I would expect over the next 12 to 18 months that you will see these be official. What we see is that, really the area that people were the most scared of, being the coast, actually had the biggest wins. And so what FEMA did is basically FEMA was commissioned to study rate adequacy of flood insurance rates. And what they found is actually that areas in Florida where, the argument has always been that Florida is a donor state to the flood program, that we pay $4 in premium for every dollar that we get back. Well, FEMA really it was designed to level the playing field on this. And so what they found is that the barrier island type regions were overpaying for flood rates, and not just barrier islands, but kind of that intracoastal waterway stretch that happens along there as well, has been really paying more than its fair share for flood insurance. And that basically the new flood maps are going to revise that. So they're going to allow for new rates to come out that should drastically help coastal flood insurance, or really coastal county like Sarasota County flood insurance. So you're going to hear some words quite a few times throughout the presentation. So just to kind of go through what words we're going to hear a lot. We're going to hear the word A or V zone. Now, if it starts with an A or a V, it really means the same thing. So whether it says AE or anything along those lines, if basically the first letter in the flood zone is A, or the first letter in the flood zone is V, that's a mandatory purchase for flood insurance. So what that means is that basically, in order to qualify for a mortgage, you're federally required to carry flood insurance. Now, obviously, if it's a cash purchase, you don't have to carry flood insurance, but a lot of people still want to carry flood insurance in those zones. So then you're going to hear the word B, C, and X, and that's a non-mandatory purchase flood zone. Now, we as an insurance agency, we highly recommend that everybody purchases flood insurance, but it's not technically required in order to qualify for a mortgage that you have flood insurance. Now, one of the things that's going to happen as we go through this is you're going to see a lot of areas that are right now in an AE flood zone moving to a BC or X flood zone. So one of the definitions that I just want to clarify is what makes it an X zone. And what makes something an X zone is when FEMA takes their 1 in 100 year flood plan. Now, that doesn't mean that it floods 1 out of every 100 years, but what that means is basically it's the 1% chance. And so it's the annualized 1% chance of flood to this level. So FEMA takes that floodplain at that 1% chance, and if the lowest adjacent grade, which is the lowest level of land immediately surrounding the home, is higher than that 1 in 100 year base flood elevation, then basically that is what makes it an X zone. And then we did just get a question that we'll clarify on here. So what does AE zone mean? So AE is a rising water flood risk. And so what that means is that basically FEMA estimates that there's a 1% chance of water rising over that land level. And so that means that the land sits at 6 feet. They estimate that 1% flood chance is at 8 feet. So to do new construction, you have to build above 8 feet. Then coastal A zone is another word you're going to hear a lot. And so what a coastal A zone is that's where right now you really have an A zone or a V zone. And the coastal A zone is kind of like the hybrid between the two of those. And so what that means is that from a construction standpoint, you have to build a new construction home to a V zone standard. So that's where you have to do like the breakaway walls, the deeper pilings, and items like that. However, insureds will now pay a flood insurance rate like they're in an AE flood zone. So if you've sold many properties that are in a VE flood zone, the easiest way to think of VE is very expensive. And the thing behind that is that VE is essentially the highest risk of a flood zone. And so typically a FEMA flood insurance policy in a VE flood zone starts in the $5,000 to $6,000 range. There are some private flood options that are occasionally less, but just from a planning standpoint, it's $5,000 to $6,000. Whereas when we go to this coastal A zone, that rate's going to drop to like $400 to $600. So that's a massive drop in terms of flood insurance premiums. And then historical rating. So the other word for historical rating is grandfather. And grandfathering is huge. Grandfathering really is a great thing. And what it means is that if you see an area where you do a lot of business and you specialize in this area, and you see that it is basically being adversely affected by the flood maps. And so essentially it's a 10-foot base flood elevation right now, and now it's going to a 12-foot base flood elevation. As long as the home is built 1975 or newer, then you're allowed to continue to rate it to the original flood map that was in effect at the time of construction. And so it really makes a big difference in terms of being able to have that grandfathering, because if somebody's buying a house now and they're worried about a flood map change that is an adverse effect, they are able to come back and use grandfathering. And so I did see 2 additional questions come in before we jump off this slide, and that is, please explain base elevation. So base elevation is basically where FEMA asks for the elevation to be. So FEMA is saying that the house has to be built to a certain height, or to get the preferred flood rating, you have to be at or above a certain level. And so that's basically their determination as to how high the home needs to be out of that 1% floodplain. And then there was another question about if an existing home structure is completely above base flood elevation, but some of the land is below base flood elevation, does the 50% rule apply to renovating a home? That is more of a question for our building department, but technically it should not require the 50% rule, but it would have to be in compliance with all code at the time that they're pulling the renovation permit on the house. So what we're going to do today is kind of walk through South to Central Sarasota County. And so we did a presentation like this about 2 weeks ago, and that recording is available online on the RASM website. And so that one covers kind of like North to Central. And so the idea of this presentation is picking up where we left off and working our way continued south within kind of the major floodplains of the Barrier Islands, as well as the Intracoastal Waterway along there, and then also really hitting on like the Venice area and the different floodplains within Venice. So one of the couple big things that you're going to see as we go through these maps is you're going to see a couple areas. So on the left side, when we do this, you're going to see the current flood map, and that's the 2016 flood map that we're currently working under in Sarasota County. On the right side, you're going to see the new proposed flood map. And on both of the flood maps, you're going to see all these little like squiggly white lines running through different areas. Those white lines are the flood zones. So we basically find where the house is in that flood zone and then find the zone that correlates to that property. On the right side maps, you're going to see a lot of blue areas. So if the area is shaded in a blue, that means that it is an A zone or a V zone. So that's that mandatory purchase flood insurance. If we see an orange area, that is a BC or X zone. And so that is basically a zone that is a non-mandatory purchase. You'll really want to pay attention to some of those. There are some that are pretty surprising as to areas that are going into non-mandatory purchase flood zones that are currently mandatory purchase. And then you're going to see a black line with triangles, and that is the coastal A zone. And so basically the way that that works is basically you want to be on the bottom side of the triangle. So essentially, as I look at this picture here, we would want to be on the below part of the screen. So you don't want the tip of the triangle pointing at you. So if the tip of the triangle is pointing at you, that means that you are in that coastal A zone. So you have to build to the V zone type standards. Now, one important thing to mention on the coastal A zone is, as the question came up about the 50% rule. If a house is going into a coastal A zone, they want to do a large renovation, they would have to meet V zone standards to do that large renovation on these new flood maps because of being in that coastal A zone. So although they're still in an A zone, they would have a different type of construction standard that they now have to build to or that they have to renovate to. So to kind of give a baseline as to where we're going to start, we are basically starting in Siesta Key, and we're going to work our way south from there. So the way that the maps kind of work, we're starting around where that red X is. So the rest of Siesta was covered on the prior, or the north side of that was covered on the prior presentations. And so we're basically going to start at Siesta and work our way south. So I just wanted to give the Google Maps references to kind of like where are we starting at. So map on the left side, this is the current flood insurance rating map. Map on the right side, this is the new proposed flood insurance rating map. This map is about as good as it can be when you're thinking about what's happening to flood insurance rates. Like it's truly amazing how much base flood elevation is dropping, and base flood elevation and flood zones directly impact what we have to build from a height standpoint, as well as what the rates are when we go to quote flood insurance for somebody. So map on the left side, you see quite a few areas in here that are VE flood zones. So I'm gonna try to circle it so that you guys can see it. Let's just try to. So basically you've got this area here that is a VE flood zone, and you've got an area down here that is a VE flood zone. Oops. And basically those flood zones are the most expensive flood rates. And if you look at the map on the right-hand side, you're seeing that all of those areas are going into an A zone. And you're seeing that basically the areas that are, so the current like VE 12-foot base flood elevations are dropping to an AE 9 and 10-foot base flood elevation, which is a massive rate impact. You then have the areas that are currently an AE 11-foot base flood elevation dropping to an 8 or a 9. So that's again a massive 3-foot drop from an impact standpoint. And then you have the areas that are currently in an AE 10 going into an AE 8. And so they just really across the board are dropping from a base flood elevation building code requirement standpoint. So, you know, what does that mean from a rate standpoint? Just to give you an example, I looked at a condo master policy, and so when I looked at the condo master policy, we looked at it from NFIP based rates. And so we took a 20-unit condo that's currently in that Siesta Key area right now in a VE elevation. And the current flood rate on there right now was $74,588. When that HOA moves to an A zone, we are able to see those rates at $9,862. So that's a huge difference. And you know, if we look at that HOA and put it in as a 20-unit HOA, that's going to be basically the current cost on there would be at $3,729 per unit if we just do simple division on there. And if we kick that to the A zone, what that does is the new cost per unit of flood premium is $493. Well, from an affordability standpoint, even though it's a very expensive, you know, Gulf front type unit, you know, dropping that HOA fee by $3,300 annually is a really big difference. And so it's a really good thing when we look at it from that standpoint. You know, in talking to Laura in a prior presentation, and we looked at a rate example like this, it was actually about $100,000 of additional buying power from a mortgage standpoint that somebody gets. And so that's a really, really big deal when you think about that from a flood rate standpoint. So as we continue to kind of work our way down Siesta, you know, the map on the left is a little hard to read. Unfortunately, that's just the best copy that FEMA publishes to be able to get. But what you really see, the majority of that map is showing is that you still have V zone in there. You have a lot of AE 11 zone, and you have a lot of AE 10, and not really much that's in like the 9-foot area. So what we see in terms of the new flood maps is if you look on the flood map on the right-hand side, kind of like that bottom left quartile type area, you do see that coastal A zone is kicking in, but that area is currently a V zone. And so it doesn't really have an effect on there because either way they have to build to that same type of construction standard. But what effect it does have is that you've got, you know, some areas do remain in a V zone. So there are a couple of like the extreme coastal risks that do stay in a V zone, but you also have a lot of areas that are in a V zone moving into an A zone. And you have areas that are basically in A zones dropping about 1 foot in terms of total base flood elevation. And so that really does make a large difference because, you know, while there is a lot of new construction in here, there's also a lot of existing construction. And from a flood elevation standpoint, you know, you even see an area that's down to a 6-foot base flood elevation. And so that means if you had that as like a ranch style home, FEMA rounds. And so when they look at that, you would have it as a 5.5 rounding up to a 6-foot base flood elevation. And so when that happens, that drops the flood rates across the board for a lot of these ranch style homes or just older renovated slab on grade type homes that a lot of people want because they don't want the stairs and things like that. Well, now you're seeing mass affordability come in from a flood insurance standpoint. So I just give an example as to when we see it drop down into like the 7-foot range. So let's just say that we have a house that's currently sitting at 6.5 feet. The current base flood elevation is 10 feet based on that prior map. And these are just looking at FEMA rates. Again, there are opportunities in private flood to get less expensive, but just comparing it to FEMA to do this would be a total current premium rate at about $3,310. A new flood premium rate at $1,380 for that same house. And so that really kind of changes the game when you're talking about some of these ranch style homes where flood insurance is becoming an affordability type issue when you see these rates dropping. Now, the key to it is you have to know the elevation of the home for this to take effect. So one of the caveats that I would encourage you is, even if the house is older and an elevation certificate is not technically required, would really be to get your elevation certificate and take a look at that elevation certificate, because it could make a massive difference from a rate standpoint. So as we kind of continue to work our way down on here, we really see a kind of recurring theme. So, I might sound repetitive through parts of these because we do kind of see the same thing happening in a lot of the areas. On the left-hand side, we see some very high base flood elevations. And on the right-hand side, we see those elevations dropping. In this area, it's about a foot that it drops down, but hey, every foot counts and it does make a large difference. And then as you look at the intracoastal side of it, you see areas that are currently in a 10-foot base flood elevation dropping down into about a 7-foot base flood elevation, which actually takes a lot of homes out of the flood zone as well. So you see a lot of those orange areas popping in there that are currently in mandatory purchase flood zones. And so again, now from a mortgage standpoint, the lender doesn't have to count flood premium towards debt to income ratios, which is a great thing from a buyer's purchase power standpoint. So as we continue to work our way down, we continue to see that recurring theme. This one is really one of, I would say, the most extreme slides from a change standpoint, where we're seeing, basically base flood elevation drop about 4 feet in a lot of these areas. So, on the left side, so the very coastal barrier island, we're seeing it at about a 2-foot drop, some areas 3-foot drops. On the right-hand side, we're seeing consistent 4-foot drops, and we're seeing consistently a lot of areas that are currently in flood zones turning orange, meaning that they're non-mandatory purchase. Now, the one thing that I will say, just to make sure that it's being considered, is if any part of the house is in a flood zone, you do have to purchase flood insurance. So even if it's just one corner, you do have to make that purchase. I did see a question come across about, will any of these slides be available? Yes, we are actually recording this meeting, so you will be able to watch it at a future time. And then there are a couple other questions that we'll go through and answer at the end. And so again, just overall, as we look at these slides and we look at what's happening, it's very, very positive for Sarasota County flood insurance and flood insurance rates that are coming through. So as we continue to look at this, we continue to kind of like walk our way down these slides. Again, you see a lot of areas that are VE zones, and then you do see a lot of areas that are AE zones, but they're just higher base flood elevations. And as you walk your way down these, you do see the pockets of basically just large base flood elevation decreases, moving from like a 12-foot base flood elevation to an 8-foot base flood elevation and things like that. And then a lot of areas where homes that are currently in flood zones are moving to non-required flood zones. And so again, really good positive news for Sarasota County flood insurance. So just want to give an example as to what it means for some of these homes that are currently in a V zone and that they're moving to an A zone. And this assumes that it's an elevated type home. And again, this is NFIP based rates. So with V zone flood insurance, it actually rates to a requirement of it rates to the total value of the home in the NFIP, not basically the amount of coverage being purchased. In an A zone, it rates to the amount of coverage being purchased. And so, although the NFIP caps out at only $250,000, a V zone rates at, if it's a $2 million rebuild, you have to pay for it like you're buying a full $2 million in coverage. So that's where right now, to give you an example of some of these V-zone home rates, you could see rates in that $12,000 range, and then you kick it to an A-zone, and that rate goes down to $450 per year. So again, although those are, upwards of $4 million purchases often, when you're talking flood rates dropping $11,500 per year, it makes a really big difference, from an affordability standpoint, but also from a mindset standpoint as to the overall cost of flood risk on the house. And so I think that you're going to see some very, very positives from buyer response standpoint as to what's going on with the flood rates coming in these areas. So we continue to work our way down, and we continue to really see that recurring theme. And so it's really just kind of gets a little repetitive through here. Again, you do see some areas that are like the extreme coastal risks that are, basically the house is like in the sand and there's no buffer or dune exposure or anything like that. Those ones are staying in a V zone. However, the V zone risk does drop down. So it goes from like a 14-foot risk down to like a 10-foot risk, which does help from a rate standpoint. And then you do see a lot of the homes that are currently in A zones maintaining in A zones, and the A zone requirement continues to drop as we work our ways down. So again, kind of the same thing that we're looking at. Now, here's the one that gets really weird, and this is just really interesting as I look at it, is you'll see a circle in there that basically shows it as what's called a zone AO, depth 2. And so in depth 1, and then you see a depth 3. So what is a zone AO? We really don't hear about those much in Florida, specifically in a coastal area. An AO zone is where FEMA uses it as it's a river flooding or canal flooding type zone, but it takes storm surge out of the risk factor there. Now, why they did that, I have no idea. As a flood insurance agent, we really just focus on reading the flood maps and understanding the flood maps. But you do see this zone AO kicking through here, and that's an extreme positive, as that's very, very rate beneficial for someone. And so I'm very optimistic when I see zone AO starting as to what that means for some of this barrier island flood rates that are currently in AE zones, and that, pretty high base flood elevations in an AE zone. So as we continue to work our way down, what we see on the left side is, again, we kind of see that AO zone in certain areas. Now on the right side, that's the really interesting one. You see that on that intracoastal side, you pretty much kick the majority of those risks. I mean, there's some that do remain in A zones, but you do kick the majority of that A zone into an X zone. And again, why did that happen? Well, those are typically newer construction type homes. And what they did is they brought fill in to build the house. And so when they brought fill in to build the house or the neighborhood, when FEMA did the revised base flood elevations at 6 and 7 feet compared to right now where they're sitting at 10 and 11 feet, the house now exceeds the height of the base flood elevation because of that fill factor. And so now it comes out of a flood zone. And so as you're looking at homes in most of these areas that are the newer builds where they're currently in flood zones, you're going to see them drop into an X zone. Now, again, from a rate standpoint, we as an insurance agency, and really, I'd say any buyer that's buying such a coastal location definitely wants to maintain carrying flood insurance. But the rate drops drastically down into like the $450 range for a flood policy. And the lender doesn't have to require it and use it as a debt to income calculation. So it's a huge win across the board when you do see areas actually moving out of flood zones. The only concern that I have as an insurance agent is you don't want people to think, well, I don't need to carry flood insurance anymore. We still highly recommend to carry a flood insurance. It's just that the price point of that flood coverage just dropped drastically. So, as we look at it, the other way to look at it is, well, let's just say that we've got a house and it's staying in a flood zone, and it's an elevated home, and it's going from a 10-foot base flood elevation, and we're seeing examples going to a 7-foot base flood elevation. So if the house is currently sitting at 10 feet and the base flood elevation is at 10 feet, the total rate right now would be $1,444 per year. As we drop it to a 7-foot base flood elevation, it now rates at a +3 elevation. and that +3 elevation has a rating factor at $422. So even if you're maintaining being in a flood zone, you're still seeing your rates drop by over $1,000 per year on an apples to apples basis using NFIP program rates, which is really a great thing to see happening from a flood rate standpoint. So as we continue to work our way down, you really continue to see that same kind of theme that we're talking about. So the left side, you see a lot of base flood elevation decreases. You see flood coming down on there. And then on the right side, you see basically you see FEMA seeing a lot of those homes with fill. And so you see them basically coming out of the flood zone, potentially, or if they're staying in a flood zone, we get to go back and look at that rate example where, on the left side, I see, base flood elevations in the 10-foot range. And on the right side, I see base flood elevation dropping into the 6-foot range if they're maintaining their status in a flood zone. So that is directly correlated to rates coming down for flooding, which is a really great thing. So again, recurring theme as we work our way down on these, that we're just seeing kind of that same thing happen. So, and one thing that we will do is if you have questions about individual risks throughout these areas, is we actually do have a way to print a individual risk change report that shows you basically like the year-over-year effect. So that's where, as we're kind of moving through these, if you're like, hey, I really want to know about this listing that I have or something like that, we can definitely get a change report for you that shows the exact changes happening on that property. So as we kind of continue to work our way down through here, what we're seeing is, again, kind of that same thing. So on the left side, we see base flood elevation at 10 and 11 feet. On the right side, we see base flood elevation at 8 and 9 feet. On the left side, we see areas that are currently in flood zones moving to being out of the flood zone on the right side. And so just overall really large winds. We do see that coastal A-zone lines kind of running through a couple areas in here. But again, those are typically areas that are pretty high risk flood zones. And so it's overall a win, even if that house does go into that coastal A-zone. So now as we get down into like the Venice type area, so we're looking at the island of Venice here. You see that, a lot of Venice, approximately probably 40 to 45% of Venice is currently sitting in a flood zone with a 10-foot base flood elevation. Well, that base flood elevation is dropping 2 feet. And so what you're seeing is on a lot of the non-coastal, meaning like non-waterfront homes, so you come like a block off of the water there, and you're seeing them go into X zones. And so again, very, very favorable that you do see those pockets where you have mass amount of homes moving X zone. Again, the only fear I have as an insurance agent is we want to make sure that we're educating people that, hey, you still want flood insurance to protect your home. It's just that now your rates came down drastically as you do have some older homes in there where flood gets cost prohibitive, and now it's not going to be as cost prohibitive on there. So again, to give you that example, as we look at it for an area like Venice, where we see that 10-foot base flood elevation drop to 7 feet, as long as that front door is sitting at 6.5 feet, you do see those flood rates drop from a current NFIP rate at $3,310 to a new NFIP rate at $1,380. And I think that makes a really big difference from an affordability standpoint, but also just from a mental mindset standpoint as to the cost of flood insurance on a house. So as we kind of come a little non-coastal, just kind of following Venice a little bit. So if you look, this is basically kind of like East Venice Avenue, where you do have huge areas on that upper screen of flood zones. And on the bottom screen, you have it as we still have certain areas that are in a flood zone. However, they are moving to we have a lot that are moving into an X zone. And so again, just very favorable from a rating standpoint. So we continue to work our way into like South Venice type area. We really continue to see kind of the same recurring theme among there, to where you've got areas that are currently AE11s. As we look at South Venice and AE10s moving to AE, basically it drops about a foot off of there, but you do see that the X zone grows because of the base flood elevation drop in terms of what FEMA predicts for that 1 in 100 year event, or that 1% chance of flooding. And so then as we continue to move down into like the Manasota Key area, now I will say this is kind of a weird one. You do see Manasota Key be very adversely affected. So Manasota Key did not do well on these flood maps. And so you see that right now, a lot of the area where the homes are built are sitting in A zones. That is moving into V zones. And so you do see a couple homes that sit in A zones still, but for the most part, probably about 80 to 90% of those homes do move into velocity flood zones. So that is not favorable from a rating standpoint, but keep in mind, we've got that historical rating or grandfathering. So any house that you have that's sitting in there that's built 1975 or newer gets to maintain its current flood rate structure as long as it was built in compliance at the time of construction. Further, you can also grandfather for things such as continuous coverage. So even if the house is built in the 60s, as long as coverage is maintained throughout the lifetime, so basically there's not a lapse in coverage at any point, you do get to maintain that type of flood rate. And then you see this other area in South Sarasota where it's currently in an A zone and it's moving into a V zone, or I'm sorry, it's moving into an X zone. And so, yeah, I do point that out because, well, I'd say about 95% of Sarasota County has a huge wind coming on these flood maps to where you're seeing rates come drastically down. You will see that kind of 5% factor where rates aren't going to be as favorable. And that's where I think that getting those individual risk reports is a really great thing to be able to get as you're going into looking at listings. You know, we can provide a quote as to what the future flood rate looks like on it, but we can also look at it, you know, on the other side as to like, hey, this is also the downside of what's going on with maybe this specific property. So with that, you know, how do I get the individualized report? So our agency, our office has partnered with Synovus on these ones to give you the individualized report. And so if you do have any, you can reach out to Laura at Synovus to be able to get the individual reports. And so definitely she is a great point of contact to be able to get that. And basically what it looks like is you'll see a report here. So the left side shows you the current flood map. So in this case, we see a house that is an AE 11-foot base flood elevation. And then on the right side, we see that it's going down to a 7-foot base flood elevation. So it's all else being equal, that could easily be a rate from $1,400 to $400 per year that could be provided. And so in this case, this was done for a listing to where somebody can show where things are headed from a risk standpoint. So with that, here's my contact information, as well as Laura with Synovus's contact information, as Synovus was the presenting company on this. Again, she just had a emergency that she was not able to be here, but Synovus, as well as with RASM, is who was able to bring this meeting together. So there are a couple questions that rolled through that we will go ahead and try to answer. So first one is, why is the base flood elevation in certain places being changed? So the base flood elevation is being changed as a result of FEMA doing a study as to what they predict that 1% chance of flooding is. And so FEMA has essentially predicted that the 1% chance of flooding, when they re-looked at it and kind of applied more technology into their rate making, is basically favorable. And so when that happens, they drop base flood elevation. So it's a lot of engineering type work that we don't really get into as an insurance agent, except for understanding that it's basically the 1% chance of flooding has been taken into account, and they're modeling the risk differently. We have another question as to when will the new premiums be effective? So that's really a good question, and we don't have an exact answer on that at this point. They're basically working their way down the coast. So it started with Pasco County. Pasco County, so think just north of the Clearwater area, just had their rates go into effect, and it was about a 2-year process. Pinellas County and then follows that, and Pinellas is about 6 months out. Hillsborough County then follows that. Hillsborough is about a year out. It then goes to Manatee at about a year to a year and a half. And then Sarasota County is sitting in the year to year and a half type range. And so, so that's a really great thing in terms of what we're seeing on there. We have another question as to, do we charge for the risk reports? We do not. So basically, Synovus is covering the cost on those. And so that's where we just ask that you send those requests through Laura at Synovus Mortgage, and she's able to do those. It is, approximately about a 12 to 24-hour turnaround time, depending on the number requested. If you ask for like 3 or 4, that does take a little bit longer than, hey, I just need this one. Sometimes we can get those expedited a little bit for you, but there's not a charge on there. There's another question about, where can I watch this recording again? That is actually one that I'm not sure, but I know that Denise with RASM has been amazing at setting all of this up. And so she is the one that's coordinating being able to get the recording posted online. So I would definitely just reach out to Denise and have her look at it. We do have a question about what led to remapping. So the long and short history of that is basically, you had the Biggert Waters Act happen in 2012. Now, if you remember Biggert Waters is a really scary time to be in insurance and real estate in Florida, because that's where you had flood rates going from $2,000 to $20,000 overnight. And that wasn't a good thing. And that was a really scary time for a lot of homeowners. So as part of Biggert Waters, they revised all of the, they revised that part of Biggert Waters to where you didn't see the rate increases. But the flip side of that is Congress required FEMA to prove, why do you think this risk should charge $20,000? Like, where did this base flood elevation actually come from? And show us the losses that actually prove that this is an adequate, actuarially sound rate. Well, when they looked at that, they said, wait, we're actually on the coastal communities overcharging, and in inland areas, specifically like some inland states where they see a lot more river type flooding, we're undercharging for those risks. And so FEMA did basically, it's a huge coastal risk methodology project. And as part of that project, they are going through and updating the base flood maps across the board. Do have another question, and it is, what are the chances the final maps will vary from the proposed maps? There's always a slight chance on that, but it's not like you're going to see something drastic. Like, it's not like we're looking at these at 6-foot base flood elevations and it's going to jump to 14-foot base flood elevations or anything along those lines. These are essentially about 99% baked. And so when we looked at the best study that I can give you would be Pasco County. And so Pasco County, because they have gone start to finish on theirs. And so they're basically following the same format that Sarasota County is going through right now. And theirs were maybe like a 1% chance of change. And actually the only thing that changed is there were a couple areas that were adversely affected where the county went and said, wait, your risk methodology is incorrect on these that are adversely affected. Please put this into the model and confirm the data that you used, and let's relook at this. And so they did that, and then it was actually consumer positive. So from a negative standpoint, what are the chances? I mean, I can't tell you that there's a 0% chance, but I can tell you that it's a very, very low likelihood of chance that it's going to change adversely. If anything, what would change is that some of the areas that are moving from an A zone to a V zone, not many areas, but there are a couple, that the county would basically try to fight those areas on behalf of the policyholders and say that the data is incorrect and that they need to be relooked at. There's another question about, can we access the revised maps on FEMA or some other website? So you are able to get them on FEMA. I will say that they are really hard to read because it's just like this huge map and there's not an overlay. So that overlay that we provided based on doing this presentation, that is us basically going in and overlaying and then running the data on there. So that's basically what we did on putting together the presentation. So there is not a tool to do that except for that individual risk report that we can run through basically you ordering it through Synovus to be able to do that. And I think that covers all of the questions that we had in the queue. So if you do have any additional questions or anything like that that pops up along the way, again, my name is Jake Holhouse with HH Insurance. Best email address for us is sales, S-A-L-E-S, at HHINS group.com, or our phone number is 727-498-5551. And then Laura is your contact for getting those individual risk reports, but also any mortgage questions or anything like that. She is your contact with Synovus Mortgage, and her phone number is 941-757-0432. And her email address is lauradorsey@synovus.com. So with that, I'll go ahead and start wrapping this up. But if any questions do pop up, please don't hesitate to reach out to us. We are here to help you on any questions. And thanks so much for listening to us.